Dividend investing is all the rage right now, but can it actually make you rich? That is the question we're going to be looking at today. Very short and simple, guys. The answer is yes, but there are a few caveats that come with this. Now, when it comes to dividend investing, you have to look at the investment returns. How long do you have to really invest in the dividend investing portfolio? And in the long run, it will be surprising the amount of money you can actually make in dividend investing. Now, personally, I go into the VOO. Most of you have talked about this and we've discussed it quite a bit, but the VOO, the Vanguard S&P 500, has a 1.5% return for dividends, which means you're going to be more focused on growth than it is going to be with dividend growth. And there are, again, a couple caveats that really come to this. Now, the goal of investing depends on the individual. So if you're looking to really build up that portfolio as you see growth stocks, as you see non-dividend paying companies continue to grow, this is something that a lot of people like to see in portfolios. The percentage returned, which again, in dividend investing, it can be looked at a little bit different. The way that I view dividend investing is kind of looking at the financial independence or having the financial freedom to live kind of a more carefree, independent life. So what does that mean? And the goal of the investing is looking for independence versus looking at the return. So big picture, this is really the crossover point that you want to look at is if you're looking and your goal is to invest in dividends, you have to make X amount of dollars, and that amount, regardless of what it is what you want to do to cover the monthly expenses. So for instance, if I'm running $2,500 in expenses per month, you want to get to a dividend portfolio that is going to yield you or pay you $2,500 per month, which means you're going to be at a break even or a 0 point. If you use my zero-based budgeting method that we kind of talked about a little bit before, you're going to be able to cover every single dollar that you have in expenses with every single dollar that you have in dividend income. That is the ultimate goal, guys. At that point, if you quit working, your expenses would be covered by the money that is coming in, and this is the financial independence. Now, most of the dividend investing doesn't really get rich until you get into the much higher numbers. So again, thinking of our same scenario, if I have $2,500 in expenses, if I'm bringing home $4,000 a month in dividend income, that is going to leave me a lot of leeway to really play with. This is the reason why dividend is so sought after and so many people are looking to it. Now, of course, this is really looking at a lot of common sense. This does take a little bit of risk, of course, involved when you look at stocks, when you look at bonds, things of that nature. You're looking at things that pay a high return. Most of the bonds, you are not going to find it unless, again, the risk is very high. A lot of people want these returns, but again, this is looking at a dividend portfolio, and this is looking at a return that you're getting on a monthly basis. Some of them pay, it's kind of crazy. You can find dividends that pay a weekly, a daily, a monthly, whatever it may be, but you can earn, again, that passive income. Now, there are a few things to remember, guys, when it comes to the dividend investing. Number one being your savings rate. This is the absolute biggest thing. Now, you're looking for the rate of return. You're not looking at, exactly the growth factor. So when you look at a lot of the dividend ETFs, when you look at a lot of the dividend stocks, most of them do not grow like you would see in a growth portfolio. And the reason for this is instead of taking the money and actually reinvesting it into the company, which a lot of them do when you look at Berkshire Hathaway, when you look at a lot of companies, they do not pay dividends. They take any money that is available and just push it and shove it right back into the company, research and development, marketing, growing the business. Now, with a lot of companies that pay dividends, they're choosing not to reinvest that money into the company, but they are looking to give that back to you, which means for a majority of companies, they won't see the same dividend or the same stock growth that we see with a growth stock because it is structurally set up as a different investment vehicle. And again, you'll see the SCHD, a lot of those will stay roughly around the same amount when it comes to value, but they are paying a high yield dividend return. Now, also with this, your savings rate, how much can you save? This is the big factor, guys. If you're looking for dividends to make you rich, you have to be putting money in there. It is almost like as you're building up that nest egg, if you're getting, let's say, $50,000 a year and you're aiming for the 50-30-20 rule, saving 20% of that income, you could put away $10,000 a year into some high dividend stocks. And there is a ton of them, guys. Now, do your own research. I am not a financial advisor. Do your own research before you're investing into some of these dividend funds, because a lot of them have a higher commission. Some of them have a trading rate, a net fee income. You have to pay attention to what they all look. Now, the focus of this method of the dividend is not really the absolute dollars when you're saving money, when you're putting money away from your income. It is more about the percentage, guys. When again, you're looking at that 50, 30, 20, if 20% of the income is what you're putting away, that is what you want to try to save at or above to really get this going. Now, like I said, when you're getting to the point of getting the dividend returns and you're putting money in and getting them to actually pay you back in those dividends, earlier as you do this, guys, reinvesting those dividends can really throw the compounding through the window, and it can go astronomically fast if you're pumping not only, let's say again, $10,000 away every single year into those dividend stocks, but any of the dividends that you're getting are reinvested right back in the stock. So you are purchasing at a faster and faster rate. Now, mathematically, you can go through and see exactly what companies pay a high dividend yield, what companies you have to put into, and how much money you're looking out. So some people will actually go in there and say, I'm looking to get $1,000 of passive income a month. How much do I have to invest, and which companies can I invest into to get that $1,000 a month? That is really the goal to achieve when you're looking at dividend investing. Now, the number two strategy, or another thing to look at to keep in mind, guys, is your investment strategy. This is something that is very, very important, guys. Looking at companies that have a very long track record of increasing their annual dividend, which I know there are some different ETFs that kind of follow this. You could choose your independent stocks, buying them individually. I know Verizon pays a really good, I believe it was 7.5 or higher percent return. When you look at CDs, when you look at bonds, when you look at other investment vehicles, most of them are not paying a 7.5% return, which is really, really good for a company, especially because they are well established. They've paid out dividends for an incredible amount of time. If you really want a fun thing to look at, guys, when you have a moment, look at Warren Buffett and look at his investment in Coca-Cola when he originally bought the shares to the dividends they're paying today, and you will see the astronomical difference in the power of those compounding dividends. Now, also, guys, looking at this, you are going to have to pay taxes on dividends. That is the reason why you're going to really have to sit down with the tax advisor, go over the pros and cons of doing a strategy like this, because when you earn the dividends, you'll actually have capital gains, which of course, dividend stocks are a lot more stable when we see up and downs in the market, where the market might be down 22%. Most of the dividend paying stocks won't see quite that effect, but you also get it on the other side, meaning that if stocks are doing really well, like we're seeing in 2023, dividend stocks are not going to perform as well as the stock market, because again, it has less of kind of a volatility when it comes to the stock market in general. The next one we look at, guys, is the time in the market. This, of course, with growth, with dividend, with anything, the longer that you're invested in the market, the more this is going to grow. So if you're looking to get a 5, 7, 10, 12% compounding, if you're putting money in there on a regular basis, and they say roughly every 7 years is the general rule that they use, you should roughly double what you have in there, your investment. So thinking about that, guys, if you put money in there, 7 years later, it is doubled. 7 years later, it is doubled. 7 years later, it is doubled. That is the power of compounding interest. And I cannot stress it enough, guys. The longer time that you have in the market, the better it is going to really yield those returns. Now, again, if you're like me and you do dollar cost averaging, I put X amount of money into the stock market every 2 weeks, regardless of the ups, the downs, the bear market, the bull market, whatever the news can say, I am consistently buying. If it's down and I'm buying, great. I love buying when things are going down. I spent 2022 investing a ton of money into the stock market. As it continued to decline, we kept putting more money in. When it came back in 23, we seen it go up a lot further, which again, I was buying it at a 22% discount. Now we're looking at an upside that is almost 30% plus if you checked out that VOO video, because of the dollar cost averaging. Some people do the value method. Some people do the dollar cost averaging. Personally, I do the dollar cost averaging. Now, the final thing in here, guys, to keep in mind is keeping the investment cost low. It is going to be a game changer when it comes to dividends. And if a lot of your dividends are being eaten up by fees, this is a place where you're going to lose your britches, guys. It's kind of crazy when you look at not only the taxes that you could be getting in there, but the dividend returns that you're paying in there. If you couple that on to a financial advisor, a 1%, 2% annual fee, if there's monthly fees, long term, 1 to 2% compounding is going to be catastrophic to the portfolio, guys. It is really, really important if you're utilizing this strategy that you're tracking the methodology, tracking the investments that you do have, not worrying very much about the market volatility with these, because again, it is the time in the market that you want to focus on. You don't want to be, hey, my investment's going down, I'm pulling out all my funds. You'll still get paid dividends for a majority of companies. Now, some companies do increase the dividends again year over year. Some companies cut dividends. It might be some things, again, you have to pay attention to. So can dividends make you rich? Yes, the answer is yes. However, it is never going to be a get rich quick scheme. There is nothing about investing. Honestly, when it comes to investing, guys, it is the slow, monotonous, regular, consistent putting money into the market that is going to build that nest egg. That is going to build that portfolio. If you're looking, 10, 20, 30, 40 years down the road, that is when you are looking at, tens of thousands, turning to hundreds of thousands, turning into millions when it comes to the investment portfolio, whether it's in a growth portfolio, whether it's in a dividend portfolio, you are going to see the returns. You just have to keep the money in there for long enough. So guys, let me know in the comments what you guys think about dividends in general. Also, if you like the content that I provide, go ahead and subscribe to the channel, guys, and I'll catch you in the next video.